So as we've been reporting, the Dow Jones Industrial Average plunged 7.8% yesterday. It's the worst one-day percentage drop since October of '08 and the worst single-day point drop in history. The tumble that is, stoking fears that coronavirus will lead to a global recession. So we wanted to bring in Scott Bauer. He's the CEO of Prosper Trading Academy.
Good morning. Thank you so much for coming on with us here on Good Day Chicago.
Good morning.
First of all, what do you want people to know?
You know, people should know, honestly, not to panic. There's a big difference between trading and investing. So, you know, I wear both hats. I trade, I teach people how to trade. However, my investments, my 401ks, my longer term investments, I don't touch. I leave that to the professional managers. And so people that are looking at their 401ks, their portfolios on a day-to-day, minute-by-minute basis now, you got to stop it.
I know.
You hear it.
That's so true.
You hear it over and over and over, but you have to stop it.
I have refused to look at mine, seriously.
Let's be fair, though, because while there are a lot of younger people, millennials, Gen Zers, that have decades to make up for these losses, if I'm facing retirement very soon, over the past 2 weeks, Scott, I've watched the markets lose 20% of their value. What do you tell those panicked phone calls, those people that have lost 20% of their nest egg?
That they are in the same spot that they were a year and a half ago, 18 months ago. The market, the value of these investments, for the most part, are in the exact same spot. I'm not saying that we can't go lower. In fact, I personally think we will have another dip lower. I don't know if that's 2%, 5%. However, you know, you can't micromanage. You really can't. You need to be prepared. Portfolios should be diversified, and this is as good as an example as any, leading back probably to, you know, the financial crisis, for people to understand that.
Okay, well, let's talk a little bit about the fears, because people have so much anxiety, and, you know, it doesn't help when, yes, the media keeps putting stuff on social media. I'm getting messages from people saying, stop talking about the coronavirus. I got to put the information out there because people want that information, but at the same time, it's that very important information that's making people stay away from venues, restaurants, health clubs, that kind of thing. So how do we get people out of that state of mind?
And it's all very real, right? It's not make-believe. It's all very real. However, there's such an important part of the market, which is the psychological part of this. And for people to think that they're going to time the market properly, whether it's on the buy side or the sell side, 99.9% of the time, people will be wrong. In fact, over the last 30 years, if you have sold at the bottom of these big sell-offs, you've missed the bulk of the rallies back. So again, very difficult. It's that FOMO, you know, fear of missing out. People want to be in, people want to be out. You just have to separate that emotion.
We are a consumer-driven economy, unlike a lot of countries around the world. And there are a lot of people who are saying if everyone's staying home, Scott, they're not buying things. And if they're not buying things, stocks are going to take more of a hit. Are you personally concerned about a recession, whether it be mild or otherwise?
A little bit. Not a lot, but a little bit. You make a great point that for the last 18 months, 24 months, the consumer has been the underpinning of this economy. That is what has driven the economy. And it's very likely that we're going to see some pullback from there. The economic fundamentals of the marketplace, though, thankfully, going into this massive sell-off, were very solid, very strong. So, you know what? We may see some pain here for the coming months here. I'm not worried about a long-term recession.
Okay. Hey, thank you very much for joining us this morning on the show, Scott Bauer.
Appreciate your time.